Hi, welcome to the Market Alert for Friday, the 26th of April 2019. So yesterday, not a lot of activity in the pound, very narrow range, sitting just below the 76% retracement, also below the 200 bar moving average, but not moving lower at the moment. If we look here, I've taken the low here to this high to give us the 76% retracement there at 128.39, and yesterday's activity, well, not a lot really. You can see there, this is a major psychological level, and to find 50 points, you can see there, it's not a great deal. In fact, the whole session yesterday, if we have a look at this and just draw across, you'll see that the average range was 8 pips, so very quiet there for this market yesterday. Again, still waiting for the Brexit news, or what's going to happen there. And speaking of news, today we've got advanced GDP from the US at 130. This declining slightly, definitely a slowdown in the global economy, that's for sure, which is not being spoken about. And the Dow prices moved lower initially, they bounced off and then they sold off again. You've seen them finding a bit of support there. This market's really struggling to move higher, and if we just go across to here, you will see this drop. I was sitting watching the markets and all of a sudden it moved sharply lower, and the reason for this was this. After deal talks collapsed, German banks struggle to set course. Commerzbank and Deutsche Bank, the talks they've been having for a few months, have fallen apart, and it's not good. Let's have a look. It says here, pulled the plug on government brokered merger talks designed to forge one strong institution out of two struggling firms. And we've seen the share price of Deutsche Bank before in the market alerts last year, how it's trading around about €9 from 150. And this bank, Deutsche Bank, has over 70 plus trillion in derivatives. So let's hope and pray that they find some way of getting through this issue that they have at the moment. Volatility, not looked at this for a while, had a request, so I'm going to reintroduce it. If you don't want to see this bit, then feel free to move on, but very important indicator. We're down back to the September lows in this area, and we can see what happened through to January, where the market fell apart. We are heading into April, where the old adage is sell in May and go away. The volatility is low enough for the market to actually, I'll just bring this back, to actually move lower, which is what we saw yesterday. We had a bit of a bounce and then we moved lower. Eventually we had a retest, and then the market continued just to move to the upside. Notice how the volume dropped off. The selling pressure hits at the previous day's low, and then we get selling and profit taking as we get a 50% retracement all the way back here to the 26,400 level. And overnight, the market at the moment trying to stay above the 200 bar moving average in DP, but failing at the moment. But certainly the market's due for a correction. It's put an awful lot on since January, and it needs to at least a 20% retracement in this market to make it worthwhile on the buy side. That may come only after we've run up towards the all-time high, though, of 26,953. That's what they're determined to do here, is to suck in the weaker traders, get the market back to the top before they then move it lower. There's no news to actually cause this market to move to the upside. The trade deal with China seems to have gone quiet. Brexit's gone quiet. It's treading water at the moment. Meanwhile, in Bitcoin, the market lower yesterday, but not in the day session. This happened just before midnight. The market trading down to 50.97, and also the 76% retracement that we had over here, also at 49.49, which you'll see there. The low 49.60. So we're just slightly higher. And in the 4-hour chart, you'll see prices again, big move to the downside there, and then profit taking coming back into the market. And in the 15-minute chart, you'll see, and this is very interesting, I've been asked about whether we should be jumping in or not. And the frustration is the big moves and the volatility, which I'll show you here. If you go to the tools option there, range statistics, and then just draw across and capture all of these bars, you will get these range statistics here. And you'll see that during the main event yesterday in session, we only had $11 range over all of these bars. That was the average. And then, of course, overnight, we see the market, or into the evening, still very quiet here, barely moving. Then all of a sudden, somebody comes in and sells a huge number of contracts. However, what this has done is made things a little bit more volatile, increasing the averages here. So following the drop, we just drag this across here, you'll see all of these bars were up to $35 over the few bars overnight, but still very, it's frustrating because we've got the movement, which we can see, there's no doubts about that. We can see from the sideways range there to here that the volatility is increased. But what's going on now is that the major moves, if we go back and look, you'll find that most of the moves, apart from the odd one, are taking place after the main event that we actually look at. I think there was Wednesday when we had a bit of a move to the downside, which is there, which is great, and then the market became sideways again. But as we look back through the week, you can see that the range is still very, very quiet. And we look here, we just have a quick look. You'll see that the average range here is just $16 over the whole of the session. So even though, and again, because of the market moving, it moved in the pre-market session on this occasion. So the only way around this, as far as I can see, is that we look at a bigger time frame but have to hold the position overnight, and that comes with its issues, because of course you can end up in a situation where you're actually long, and then this happens when you're not watching the market. As long as you've got a stop in, you'll be taken out. But the problem is the market's still trying to find at this point enough participants to during the what I would call the European session to actually increase that volatility. And this is what we're looking for. What we see here is what we're looking for consistently, not this. This is nice because you can see there's a decent form to the bars, and here it's just not doing an awful lot, and it's now starting to head in this sort of direction as well. So just very frustrating. So at the moment I'm standing aside until I can see this sort of activity, and there's at least 3 to 4 winners, percentages wise, at least 60%, 70% during the day, which we had in the sort of December time. Just patience and sitting on hands and waiting, really. It is very frustrating, but it's a bit like going to a party and there's not enough people there. It's a boring party. You know, we need a few more people to come in and play this game so that we can get the ranges up and the momentum up. So, yeah, like I say, frustrating, but it is what it is, and we just have to live with it at the moment. But it's worth waiting for, because when Bitcoin does wake up and starts having those nice intraday swings, then it'll be worth the wait. Okay, that will do it for this one. Let's see what happens today as far as the other markets are concerned. And with that, have a great weekend also. And as ever, thanks for watching. See you in the next one.